Hi traders, welcome to Profiling to Profit, the week ahead in futures. It is September 4th, 2016. Yes, we are through August, and for those of you who are new to trading, what we just saw in August is pretty normal trading. Light volume, grinds usually one direction, and not a lot going on, in other words. And, in the past, recently, since probably 2007, 2008, August has been up and down. We've seen months where it's been crazy. A year ago, we had the mini flash crash in August, which made for a very interesting August. So a lot of things can happen in August, but for the most part, what we just saw was pretty normal. Now we are in the September. We've turned a page on the calendar, and now we're looking forward. A lot of things coming up at the end of the year here, especially in the United States. We have obviously the elections here, which is turning out to be a dogfight and may prove to help the markets become more volatile. We have news coming up. We have issues ahead with the central bankers and their interest rate decisions and how they're going to unwind this mess that they've got us into. And make no bones about it, guys, it is a mess. The central bankers they've used their intelligence. Unfortunately, they've outthought themselves, and they've probably gone way too far in this thing, and it's gonna hurt more than it did or would have if they would have just let it alone and let the natural course of business take its place. But it didn't, and now we're in this whole conundrum that we have. So let's get started. Let's take a look at the week ahead in the calendar. Really not hardly anything going on in the U.S. this week in the calendar. We have jobless claims on Thursday. We, of course, EIA report if you're an oil trader. Other than that, Rosengren is speaking on Friday. I don't think that's a market mover at all. However, there is some big decisions going on around the world that we need to be aware of. Kuroda is speaking in Japan actually Monday, and that's probably not going to be a big one. However, Australia has an interest rate decision. We have a few interest rate decisions this week. Australia is going to make an interest rate decision. We'll keep an eye on that one. We think that has some play into the market. Let's see here. Inflation report hearings. I wouldn't say that's huge out of Great Britain. However, we do have Bank of Canada has an interest rate decision. I want to keep an eye on that, especially if you guys are currency traders. And then the big one here is the ECB interest rate decision this week, which is on Thursday. Keep an eye out for that. Other than that, just, again, there's a few other little red newses happening this week. Keep an eye on those. Make sure you are aware of them before you step into trade or cover or hedge any other positions that you may have. So let's get started. Take a look at the charts. NASDAQ last week. Let's go back 2 weeks ago. 2 weeks ago, we had this engulfing week, which is pretty bearish in our book. Nice balance week, but it engulfed to the downside. Right off the bat, we had an up and down week. We did poke through the bottom of that, but of course the unemployment number on Friday here in the U.S., it disappointed. We did get a gap up. It sold off and then come back and tried to rally in the afternoon on a Friday. Typically, that's a game that's being played. And it's something to watch, guys, because here's what we've had. Let's take a look at this. Our zone here, our risk zone here, up here at 48.18. We said, hey, anything above that, this market's going to probably get some legs and go up to 48.36. And take out that high. Now, again, we felt this was a bit bearish in here, and we wanted to see if this thing could come down in this 46.80 area. Obviously, it got stopped. We have 3 tests down here. However, check this out. We have 2 almost to the tick tests of this upper zone. Next time up, most likely this thing will rip it, take out stops, and if it decides it has some energy and wants to keep going, it'll go to 48.36. So right now, in our book, there's nothing happening in the NASDAQ. We're just going to watch. We want to see if this gets taken out or if they roll it down and try to take out these lows down here. So right now, we are still short, as full disclosure. We've been short for a little while since this moved back up into the zone, but our short is in jeopardy right now. We just need to say our stops are just above the zone here, so we're watching that. If you're not in anything right now, it's just to sit on your hands time. Same thing with the ES. Not much going on in the ES. It's just pretty much a mirrored effect of the NASDAQ at this time. Had the engulfing week, came down, poked through the lows of last week or 2 weeks ago, and then of course rallied back up into the late week. Now the one snake in the woodpile here, guys, is the Russell. We thought the Russell would follow the rest of the indices and roll over. He couldn't handle it, but guess what? They engulfed the previous week's profile. So we had a sort of a double profile 2 weeks ago. This thing came down, took out the lows, and of course finished at the highs, at the very highs, and took the previous or 2 weeks high out. They're making new highs, 1252. So what's that mean? If the Russell keeps going now the Russell could be the leader and take the rest of the indices with it, and that's what we're keeping an eye on. I'm going to suspect that our short right now will get taken out in Monday or Tuesday, if maybe not even earlier than that. We're currently, actually the Globex session is just opening right now as I speak, so we'll just have to keep an eye on that too. All right, let's move on. Gold. Gold is working out well. Obviously, we're short gold. Excuse me. The zone gave you another opportunity up here to get short if you were not short, and we've hit our first target, which we were looking at 1310. The next target for us is 1291. We like this trade, even though we had an incredible move off this news on Friday. The dollar is actually dollar sold off a little bit, not a lot. It's still very bullish at this point in time. The consensus is that the dollar is going to continue to rise. If the dollar continues to rise, that doesn't bode well for gold. So we're going to watch gold and the dollar in here. Right now our short is still in good position. It's a free trade to us, and we're watching for that second target down in this zone, that 1290 area, give or take a few ticks in there. So watch gold very closely. Let's take a look at crude oil. Crude oil is working well. Again, something I'm going to point out to you, if you were able to get short into crude for some reason on this break, then you got a nice trade going on. We're not short right now. Again, if you are, great. It's not a bad trade. Just define your stops, probably above the zone at 46.76. Above there, we're ping-ponging right now. I wanted to pull this out a little bit and show you guys this. We are ping-ponging pretty heavy in here, and we're right in the middle of this stuff. Okay, we have this wedge that's forming on the crude oil. It's a bigger balance here. If we pull this thing way out, you can see the POCs right here. We've blown through it a few times. We just keep bouncing back and forth, ping-ponging. The bigger move will come from this area right here. It is sort of a coin toss right now which direction that will go. Now, hindsight, we look at this and you say, this is a big flag right here. This thing could move up and take, the target up here would be that 54.60 area where we had this monster gap, and then up to fill that gap at 56.82. That makes a lot of sense. But right now, the first thing is they got to get it out of this balance right here. Somebody's got to move this out of here. In other words, somebody's got to put some volume into this thing. We're not seeing it right now. So in crude, be very careful in here. Again, we're bouncing around. Watch these upper and lower areas to see if we break with some volume. If we can, we'll buy the pullbacks and go from there. But for right now, if you're not in this, we're just saying stay away for the moment. All right, let's go to the euro. We haven't seen the euro for a couple weeks. I tell you, we're lucky we didn't get a trigger in this thing. Honestly, as a refresher, this thing was going sideways. Oh, let me go back to the 2-hour candles, guys. And you know what? And I'm gonna also say this: we get a lot of questions on this. The profile, the smaller profiles here are weekly profiles. The candles are 2-hour candles. Obviously, this profile off to the right here is a longer-term profile that pulls in the big picture for us. All right, so we thought, and we started looking at this many weeks ago. What is it? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks ago. We started talking about this, and we were watching this balance area, and we drew some areas that we thought, okay, if these get up to, these are our risk areas right here. Well, the euro was going sideways for a while, and again, let's pull out the euro and take a look at the longer time frames. The euro's been going sideways for quite some time. as actually since March of last year in 2015. You could probably draw a line in the middle of this of average price of 111. Of course, this is a quick guesstimation, but we're right in the middle of that stuff right this minute. We're at 111.65. So there's no direction to the euro. They keep playing with this thing. Will it move? Eventually it will move, but we thought there was going to be some movement after some announcements recently, and it's been nothing, just a lot of junk. And so we saw a movement down, movement back up. We saw a break of the zone that we were looking for, and we didn't take that zone because of the way it moved up to it. And then when we got above the zone, we said, okay, well, here's a chance to get maybe nibble long on this thing to go up into the upper range up here and see if we can't catch this trend line. Well, of course, they blew right through the zone, didn't even give us a chance to get long, and that's why we use triggers, by the way, so we don't blindly take these things and get wiped out. Now we're back down in the chop and slop here. Again, I know it's a theme that I've said on the crude oil and the NASDAQ and stuff, but right now it's sideways. There's no direction. It's really hard to trade this one. We do have, again, the ECB coming out this week talking about interest rates. That may cause some movement, but yet until we get out of this sideways stuff, it's going to be very difficult to pick trades. They're going to be very short term, and they're almost going to be like scalping. And again, we're not scalpers, so that's not of interest to us. So, right now on the euro, just keep it on the radar screen. There's just nothing to trade. So keep it on your watch list. All right. The notes have been great to us. Let's go take the notes. Of course, we talked about this. We got short on this movement below this zone. We've been talking about it. We had 1, 2, 3, 4, 5, 6, 7 weeks of sideways, and of course, we said above the zone, above the upper zone at 133 area, this thing was off to the races. Below this zone, 131, we're going to see some sell. We did see sells. We did get our first target down here. We're still short in this. We're looking for our second target down around the 129.28 area. We like this. We think there's definitely more movement to the downside. Matter of fact, we think it's going to come below that. But right now, we're going to take our targets and move on. It would be a great trade at this target right now. So we're looking forward to that, hitting that second target and making a decision off of that. Same thing with bonds. If you're a bond trader instead of a note trader, same thing. Bonds, but bonds has not moved as much. Bonds did move back out of that zone. It did come back and kiss the zone. As we say, it went back and visited the scene of the crime, and then of course took off. That's pretty normal behavior in the markets. And now we're just looking for bonds to break this low of last week and then continue to the downside with the notes. We believe that will happen as well. Everything, right now the path of least resistance on the bonds and notes is to the downside. All right, let's take a look at the grains real quick and we'll wrap this up. Grains, as suspected, grains took out the lows, especially on corn. Corn wiped out anybody who was long here thinking off this candle and the USDA report that, hey man, there's the bottom's in for the year. Just got bamboozled on this deal. They took them out and crushed them pretty hard. So now they did come back into the range of the previous week here. You could say that's pretty bullish. Right now we think corn into the harvest season will probably just go a little bit of sideways to up. Corn's not going to get any true legs until it gets over $3.45. Once it gets over and starts trading above that level, then there's a great chance that corn can get some movement into the 369 area. But at this point, with as much corn as going to come into the marketplace, I don't see that soon. Could it happen? Will it happen? Most likely. Don't know if it's 1 month, 1 week, 1 year. It's hard to tell. It's going to be a supply and demand issue, and we're going to have to see how that all plays out. So right now, nothing in corn. It's all sideways again. There's a lot of volatility coming up because of the unknown in the harvest, and some people in the south have started getting the combines out, and they're starting to cut, and the trucks are starting to haul. So as September and October and parts of November roll around, we'll see more and more coming out on this. So keep an eye on that. Same thing with soybeans. Soybeans, the same thing, took out those lows. It cleaned up this mess down here that we thought would definitely happen. It did. It didn't wipe them out in soybeans like they did in corn. In corn, they just took them to the woodshed on that deal. Let's go back and look at corn. And you guys got to understand something, why we get an exacerbated move. First of all, corn is sort of the easier product of the grains to trade. It's where if you're going to be a beginner in the grains, you probably want to be trading corn and not soybeans or wheat. And corn sees a lot of play, especially on the day trading side of things. And so what happens is when you get a stop down here that we saw when people thought the bottom was in, they put a move in. They put a orders in. They started bidding this thing up. What happens? They roll them over. The day traders still wanting to buy this stuff, and any day traders that are in this is probably going to put stops below this 322 area. When they get taken out, they start running for the hills. And as you can see, we had this sort of exacerbated move down here. That's a pretty big move in 1 week. And so they crushed all these short-term traders and these weak longs in here, thinking, hey, the bottom's in, and that's why we get a big move. And that's why any move is big. When there's a lot of stops built out and there's a lot of weak hands, and when we say a weak hand, these are people who don't have the account sizes typically to hold through all this mess. Now you can see here we did recover and we came back into the range. So if you are able to hold this stuff, again, it's based on account size and your experience and whatnot, if you're able to hold into this stuff, then you're fine. But however, if you don't have big accounts and can't take long, the heat like you took in this situation, then you gotta throw the stop out there. You gotta get out of this thing as quickly as possible, and that's why we see these types of move. Okay, I think that's it for the week. Again, guys, a lot of sitting on the sidelines right now. We're in a position where markets are sort of going sideways, waiting on some decisions to be made. Whether it's central bankers, whether it's an election in the United States, there's a lot of things going on, and we think that the fall could have a lot of fireworks coming up. So, keep your powder dry. You don't have to trade every day. You don't have to trade every move. Just pick your moves, pick your spots based on your trade setup. Make that happen, manage the risk, and keep collecting money in your accounts, and you'll be just fine. Other than that, watch your news. And of course, as we always say, if you guys are struggling or need any help, get on over to Market Profile Trading Academy under the Free Resources tab. We'll click that here. Under the Free Resources tab, you scroll down on the right-hand side of the page. We have a load of information over here. We have examples, we have resources, we have trade management information, we have execution information, psychology information, videos, and webinars. Also, get on our mailing list. You'll find out when our free webinars are. If you do that, just all you need to do is sign up for our 7 Secrets to Trading Success ebook here, and you'll be automatically, we're not going to spam you all day long. We're going to send you an email every now and then letting you know that there's a free webinar. And again, those are educational webinars. There's no sales, no offers or anything after that, just good information. So guys, have a great week. Reminder, tomorrow, Monday, it is a holiday in the United States. Markets will be open. They will only be open a half day, and I promise you, no trader in their right mind in the U.S. will be trading them. At least any profitable trader will be trading them. Other than that, have a great long holiday weekend. Have a great week trading, and we will talk to you next week. Take care.